Hi, I'm Brien Lundin. I'm at the Metal Investors Forum, and I'm talking here with Pat Donnelly, president of First Mining Finance. And Pat, I'm proud that Gold Newsletter was one of the first, if not the first, advisory to recommend First Mining Finance when the story was first being put together. And the reason I did that is because the story was something that was very familiar to me, where you build out of the money resources. And in particular, it's been done in silver, it's been done in gold, but you are looking at, you and Keith Neumeyer, who started the company, were looking at building really quality resources, a land bank, as it were, while they were out of favor in the bottom of the market. And out of all the people invested in this sector, you guys are probably very disappointed to see the market take off because you were just really getting going, buying some undervalued assets. So can you kind of describe that process, how you went about it and what you were able to acquire while the getting was good, as it were?
Yeah. Thanks, Brian. It was, we started this company just over 2 years ago. Mm-hmm. And obviously at that time, we were in one of the worst bear markets for mining equities in general. I mean, I've been in this business for, 25 years. I spent most of the 1990s as a geologist, and I never seen valuations where they were a couple of years ago. Right. So, and when I met Keith, the business model is to go and take advantage of that. Right. People thought we were crazy. We were nuts. Mm-hmm. Why are you doing this? Well, because that was the right time to do it. A lot of groups try to do what we're doing at the top of the market. Mm-hmm. And Keith was convinced we're at the bottom of the market. So, in a very short period of time, we raised $7 million. We merged three private companies together. Mm-hmm. And we became listed almost exactly 2 years ago. And we had a list of about 100 companies or assets that we thought were really compelling, and we whittled it down to about 10 assets. And then we got going. Mm-hmm. And at the top of the list was a company called Coastal Gold with the Hope Brook project. And we closed that in July of 2015. And then we did two more deals later that year with Gold Canyon and PC Gold. And then we acquired Clifton Star, Gold Rush. And then last summer, we did two transformational deals with Temaka Gold, which is a private company, and the acquisition of Cameron from Chalice Gold. And as you stated, we were just getting going. We were preparing to do a hostile in one company that had a really compelling asset, and the management team didn't want to play ball, and we raised $27 million last summer to get our war chest ready to go because we were rubbing our hands and getting ready for the next phase. And then, Brexit happened and the appetite for gold improved significantly. Yeah. And obviously capital came back into the markets and valuations went up and liquidity came back. And so it got much more difficult to do deals. And like I said, we were ready to do another 2 or 3 deals last year. And as I've always said, we're not going to overpay. We were buying assets for less than $10 an ounce, and we saw valuations go back up to $50 an ounce again. So we're not going to overpay. We're disciplined, and we think we'll see opportunities like this again.
Well, let's talk about that. The value then. What is your current gold resource, and what's that valued at per ounce right now?
Well, right now, we bought, the average purchase price was $8 million, $8 an ounce. Right. And we have 12 million ounces, 7 million ounces of measured and indicated and 5 million ounces inferred. A month ago, we were trading around, $40 an ounce US, and now we're trading around $20 an ounce US. Obviously, our shares have come under pressure lately. Yeah, and it wasn't
anything to do with the company. It was kind of a external event with the GDXJ index. Can you explain that?
Sure. So we're the GDXJ, the Van Eck Gold Miners Junior ETF. We became eligible for that ETF last December, and it's a $5 billion ETF. And they had a massive inflow of capital, about $1.5 billion into that fund. But however, it became a victim of its own success. It became too big, whereas because securities laws prohibit funds from owning more than 20%. If you own more than 19.9%, you must take them out. You must make an offer for the company. So what happened was they had so much capital flowing in, they ran out of names to buy.
Yeah.
So they had to change the criteria so they can accommodate more companies. So
and it's not just a rebalancing, which they do every quarter. It's an actual complete reformation of the index.
It's an overhaul.
Where they're going higher up the food chain.
So yeah, they went, I believe, from the upper market cap was $2.5 billion to I think it was $3.5 or $4 billion. And so they had to start adding some larger cap companies. But in order to get them in, they're going to have to rebalance the entire portfolio.
And sell some companies.
And that's where we got caught.
Right.
And it's not just us. There's about 20 other companies that are in the same situation. So they announced it. They could have been a lot more eloquent and thoughtful about how they came about it. They just announced it and said, hey, we're going to do this and we got to rebalance everything and we got to fire all these companies out the door. And they're not selling the entire position of First Mining. They had about 90 million shares. They need to get down to about 40 or 50 million shares. So that's resulted in quite a bit of pressure on our stock. And but that being said, I get phone calls every day from people going, "What's going on?" I says, "Business as usual." We got $28 million in cash Canadian. That'll last us 3 years. We're drilling. We got 50,000 meters of drilling budget this year.
Wow. So a lot of news. So what you're doing is taking those assets that you've banked and now bringing them up the development curve, bringing them up the value curve.
Absolutely. We're de-risking them. We're adding internal value. Last summer when we realized last summer that it was getting harder to do deals, the markets, the feedback we're getting from the markets was, okay, if you're not doing deals, then what are you doing? And the other question we were getting is, okay, you did all these deals. What do you have? And the other thing was, if you're not doing deals, how are you going to make noise? How are you going to generate interest? And as you're well aware, Brian, to generate interest, you got to have catalysts, you got to have news flow, you got to generate some excitement. So we came up with a $20 million budget, Canadian dollars, last fall, and we're drilling 50,000 meters of drilling. So right now in our Golden project, 2.3 million ounces of measured, indicated, and inferred. It has a grade about 1.5 grams per ton. Yeah. We're drilling 28,000 meters there.
And a lot of good results already out.
Yeah, absolutely. We've put out 2 press releases so far, totaling 23 holes. 22 out of 23 holes had mineralization. Yeah. And a good portion of those holes had really good mineralization, 2 to 4 grams over 30, 40 meters. It's infill drilling, but it's going to give us much more confidence in the resource. We'll be able to convert a substantial chunk of the inferred resource into measured indicated. I don't know how that's going to pan out. I don't want to get ahead of myself. But that being said, it's gone as well as it could be, and I'm very excited. If you look at the results in isolation, they're very good. They're good grades. They're economic, and so we're 80% in with the drilling now, but we've only released 23 out of about 108 holes that we plan to drill. So we'll have lots of news flow. Every couple of weeks, we'll have more drill holes coming out and hopefully lots of good news.
Well, that's exciting in the days and weeks ahead, a lot of news flow. But right now, the company's on sale, so this is very timely. It's a great time to get it.
I get questions all the time, Brian, when's a good entry point? And I always tell people, well, just wait for the dips, wait for the dips. This is a really good dip. Yeah. And, let me put it this way. We were at $1 just a few weeks ago, and now we're trading around 60 cents Canadian. And we have 2 analysts covering us, and they have target prices of $1.70 and $1.50, and here we are at 60 cents. We're trading at $20 an ounce. We're highly undervalued. Yeah. We don't need to raise money. We got 3 years of cash. We don't need to raise money. It's business as usual. We're moving these assets forward. We're de-risking them. We're working on a PEA, a preliminary economic assessment, spring poll. We'll have that out in the next month or 2. We think that'll be a significant catalyst. So there's business as usual. We're adding value to these assets. And as Keith would always say, Keith Newmeyer, founder who founded First Majestic Silver and First Quantum Minerals, this is his next $1 billion company. And he has so much conviction in it. He's been back in the market again buying shares. He bought another 100,000 shares in the market last week.
Well, if it's good enough for him, it ought to be good enough for anybody else.
He's pulling out his wallet and he's putting more skin into the game and getting behind the company as he always has been with his other companies.
Great. Well, Pat, thanks so much for updating us on First Mining Finance. It looks like a great time to buy the company.
Absolutely. Thank you, Brian. I appreciate your time.
Thank you.